what has happened here, it kind of proves beyond theory what could happen in a market that is so volatile, in which there's so many concerns over a bubble. A rumour has been sufficient to affect the shares of several companies.
Joining me again on the Tech Report is Natasha Bernal, Senior Business Editor at Wired. Thank you for joining me.
Thank you for having me, Isaac.
I want to talk about how, obviously we've seen big drops in AI-related stocks over the last sort of 3 weeks, but then more recently, yesterday, we saw Nvidia lose another sort of, I think it was about 3% at one point at least, off its market cap, on the news that there was just talks between Meta and Google for Google to supply some chips for its data centers. What do you make of there being such a large market reaction to rumors of talks?
Yeah, so the rumor that's circulating at the moment is that Meta, which is one of Nvidia's core customers, by the way, it could strike a deal with Google to use its tensor processing units for data centers. So the report first came out in the information, and it said that that Meta was considering using these tensor processing units from 2027 in its data centers, and may also rent further TPUs through Google Cloud starting as early as next year. So yeah, Nvidia did dip on it. There was also other dips with associated businesses. A Google stock rose almost 2% on the news, putting it on track to hit the $4 trillion valuation target that it has. Nvidia responded on Tuesday saying that its tech remains a generation ahead of the industry, and was saying, we're delighted by Google's success. They've made great advances on AI and continue to supply to Google. Nvidia's a generation ahead of the industry, and it's the only platform that runs every AI model and does it everywhere computing is done. So that was Nvidia's point of view. What do I make of the dip? I mean, this is another example of just how fickle the market has become. Obviously, this deal, should it be struck, should it go ahead, has massive repercussions for Nvidia. Currently, Nvidia dominates around 90% of the chip market. It is the major supplier to all of these businesses. These businesses have been considering diversifying their portfolio just because it's a astute thing to do, and this is the first example of that happening. We've mentioned it before about the potential for pitfalls for Nvidia's growth plan, and this is one of them that may be coming true. If Meta decides to partner with Google and decides to use TPUs instead of GPUs from Nvidia, then that could very much become a signal for other businesses to follow and to do the same. Meta is a major player in the AI game. It's obviously not the most advanced player. Llama is still, lagging behind the likes of Gemini, and, the Gemini 3's just come out, and the likes of ChatGPT 5. However, it is very much in on the game, and it's a major customer for Nvidia, as I said before. And this is not good news for Nvidia and for its dominance of the market.
So looking more specifically at the sort of interaction between Meta and Google, it's sort of talks about having talks, but it has had such a big impact on Nvidia's shares. But what do we actually know about what is going on between Meta and Google here?
We don't know anything. That's the thing. Nothing's been confirmed. Neither of the companies have sent out a statement of any kind. So all of this is just market speculation based on reports of rumours circulating and people in the know who have spoken to the information and other news outlets. So we don't actually know that anything is happening. There's no contract out there. When that does happen, I do expect that there will be more of a cemented dip in the market, I imagine, because this will be confirmation. The rumours, though, have been enough to dip it a significant amount. I suppose for Nvidia, this is shares come, shares go. The market is fickle. It will go up, it will go down. These things will happen. However, if it does come to play, this is a significant move indeed. In terms of how that would work, I mean, Meta is making massive investments in data infrastructure, in data centers, and in chips. So I don't necessarily think that this will mean that Meta cuts ties with Nvidia. Nothing like that. I think it will just be a diversification of its portfolio. It will decide, I want to do a certain amount of percentage of chips with Nvidia, and do that side of things, and do another percentage with Google. Google is a client, as Nvidia said. Google does use Nvidia chips as well, and I guess the rise and rise of TPUs and the more use that Google gets commercially out of developing these chips will probably also mean an unwinding and unbundling of that relationship. It makes no sense for, I suppose, if you're trying to sell chips, for you to use chips from a competitor. So I guess that there also are knock-on effects there. I thought it was interesting that with the Nvidia slight dip that we saw on Tuesday, there was also a knock-on effect for companies that rely really heavily on Nvidia. So the FT was reporting that Nvidia's shares closed 2.6% lower after having shared more than 7% in early trading on Tuesday, and then they rippled through to server maker Supermicro, which is a key partner to Nvidia, dropped 2.5%. Software group Oracle, which has committed to spending billions of dollars on high performance systems from Nvidia, lost 1.6%. Data center operator CoreWeave, which is working really closely with Nvidia, and Nvidia owns a 6% stake in it, fell 3.1%. And AI cloud rival Nebius, which was down 3.3%. So we've seen like a little knock-on effect. And I think what has happened here, it kind of proves beyond theory what could happen in a market that is so volatile, in which there's so many concerns over a bubble. A rumour has been sufficient to affect the shares of several companies, not just one. It's been sufficient to move market interest for a very temporary period of time, I hasten to say. But it just shows this isn't even confirmed, and already the market has moved, and it's such an interesting testament, I think, to what could happen should there be a major breakthrough for one of the Magnificent Seven. Should there be a big deal that's announced that topples the promise for Nvidia and its future market domination. This is rumor, and already that's happened. If something were to be confirmed, it would multiply. And so I think that this is just a small show of what could come if things continue to be this turbulent, and if the market continues to heat up with loads of competition, and people trying to enter the chip race.
A lot of people hearing this might not quite know what a TPU is, and obviously has heard Nvidia saying that there's no comparison to their GPU. So why might somebody pick, or why might Meta pick, Google's TPUs over and above Nvidia's GPUs?
Put really simply, Nvidia's GPUs were developed to do like video game images and render them in a really lifelike sort of way, and they can process multiple tasks really quickly through thousands of different computing cores. So they're really good for Gen AI. They're really good coming up with sort of creative things very, very quickly, and at a speed that basically no other AI chip can rival. TPUs were championed by Google, built by Google, and they are very good at sort of deep thinking and deep learning, and they're very, very good at sort of the AI work relating to matrix multiplication, which is like training neural networks to generate responses that are really good to prompts. So it obviously is something that Google developed with DeepMind. It's really, really good with sort of the I suppose the next generation thinking of AI and AI systems. But going back to the chip things, you've got GPUs, which are more adaptable and programmable, but more costly. TPUs, cheaper, but they're not as fast. And so I guess the reason why you might pick TPUs over GPUs is because GPUs, unlike TPUs are very finely tuned for like tensor operations, and they outperform GPUs in that. It depends for what you want it. I guess you would choose one over the other. But the interesting thing about TPUs is that Google's been able to personalize it, and they've stripped out the bits that aren't useful for AI. So I guess that's what probably makes it a bit appealing to Meta, reportedly, and certainly it makes it an attractive proposition as an alternative to Nvidia. I think interestingly, we were talking last week about AMD and about what might come up as like I suppose a rival to Nvidia, and I think Gemini 3 and just the way it's operating is a problem for OpenAI, and I would say TPUs are a problem for Nvidia. So it's like a double whammy potentially if there's large amounts of adoption.
So how do you think the market correction that we've seen sort of throughout November has changed the mood among AI investors? Because I mean, my assumption would have been that it would calm things down a little bit. People have valuations have reduced, people are a little bit more tentative, and it would have calmed. Like you said, we've got the sawtooth going up, and now we've seen the dip, and now we're in a sort of a bit of a moment of reevaluation. But you're saying things are actually still just as volatile as they were before.
I mean, it certainly seems like it. We had in the last week alone, Nvidia's results were a huge kind of turning point. We were talking about it on this show. We weren't sure what was going to happen. Investors were talking to the press saying we're thinking it might be a 6% swing in either way. It was a positive result. So there was a lot of turmoil before. Then the market picked up again because Nvidia's results were beyond expected and everything went up. And now we're back with some uncertainty and the market swing down. So it does certainly feel like we are in a situation where there is no clear direction. Valuations are still going up. The positivity, that the market buoyancy for AI is still certainly gathering momentum. However, it does feel like there are lots of hiccups along the way where people aren't sure if they're backing the right horse. They're not sure whether these companies are making the right financial decisions or business decisions. And this is just the market showing that, right? You've got very, very, I suppose, cautious investors who are worried less potentially about the decisions that these companies are making. So it's less maybe about the decision of Meta to go with Google versus with Nvidia, but more about what will that mean for the other people who are investing in this market, because you don't want to be the one who's going against the current at this point. So this is what we're seeing. It's a very a market led almost by feeling by animus rather than by the thought process, and it is about saying what are other people going to think, so that I'm not the last one caught out, right? So if people believe that Google and Gemini 3 are going to eclipse Nvidia and OpenAI, if that's what you believe, now's the time to do something, obviously, because they're in this race. But, I suppose for a lot of people, there is that uncertainty of, okay, what about if OpenAI comes up with another ChatGPT, the next iteration that will blow us out of the market again? It's that uncertainty of not knowing what might happen next, which is huge for this market. And it is a situation where those seesaw movements are likely to continue for sure.
Is there anything to comfort those who think that there is an AI bubble at the moment? Anything that is sort of this caution that maybe things will be a little bit better, or anything?
No. So I think like the only thing that I suppose to me is your average person who doesn't, I would not provide investment advice, and I don't actually invest myself. So I can only speak as sort of a lay person who's been watching this incredibly closely. These are businesses who they are extremely large. And they are extremely well established. It feels very strongly like this is a very core part of all of their businesses, and they are pursuing AI aggressively. And I would say that it is it's a very different scenario to perhaps some of the more volatile and unpredictable markets. I feel like crypto for me is like a great example of that. When we had the meme coin boom, when we had NFTs, this is very different from that. So I think if what you're looking at is investing in cutting edge technology, you are in a much safer place betting to back Google, or thinking that you might look at stocks from Meta or whatever, then you might be investing in a meme coin. And I think there is a huge gulf of difference between the two, and a lot of it is speculative. And I think that's where people forget a little bit, because they're such big names, because they're such big brands, and have huge pockets, and they're able to make massive billion-dollar investments. They forget that all of this, the actual difference that AI will make in our lives, is still quite speculative. We've had generative AI, it's true, it's made a difference, but it's not necessarily the game changer yet that it has been presented to as investors. So I think that's what we're missing at the moment. And I do think that if you're afraid of the bubble, why are you in it? Like, it's not gonna end. There's always going to be some element of speculation. in the world of tech, nothing is clear. Like it's a huge gamble that these companies are after, and nothing is a dead cert. There could be some element of technology that comes out completely from left field that blows AI and the AI plans away, and that's something that people have to just accept. I think when it comes to this AI bubble, though, the question is less about if it's a bubble and if that's a problem. It's more like, who blinks first? When will it burst? And that's the concern from AI investors at the moment, right? They are just hopeful that they're not the last ones. They're not the last ones to blink, because that's a terrible thing. And that's the big danger at the moment, that it seems like the market is very, very strongly governed by sentiment and by emotions, and people just kind of going, okay, I might believe in this, I might believe in the stock, I might believe in this approach. However, I believe that most people are not going to do that, and therefore I'm going to go where the most people are going to go first, so that I don't lose out. And that's where you've got a lot of short sellers at the moment, and a lot of people that are trying to almost make it burst for its own volition. These are critics that are not going to go away.
On that, what do you make of sort of Michael Burry's assessment of the AI bubble? From what I can tell, it's built on sort of two separate factors of GPU shelf life being overstated to sort of justify this massive capital expenditure that we're seeing. But then also sort of on the flip side of it as well, sort of an overestimation of just how much of an exponential increase we'll see in the compute needed for AI in the future. What do you sort of make of his assessment?
Yeah, I mean, it's interesting because he's questioned the financial practices across all the major AI developers, and he's argued things like stock-based compensation, buyback accounting, and depreciation methods would distort the profitability of these businesses. And he's also kind of compared current AI companies to like past scandals, corporate scandals, and suggested that, a lot of them are relying on cash flows that appear circular. What do I think of his arguments? I mean, I know the companies themselves have said, no, he's wrong. He's basing this off wrong information. This isn't correct. And they've tried to provide some evidence to back that up. I feel it's very difficult for these companies, especially with the pace at which they're making deals. And he is right. There are some circularity. There's some circular elements to the deals that they're making, right? You've got OpenAI with Nvidia with CoreWeave with OpenAI. You can see how all of these deals are becoming increasingly interconnected, and how precarious the fates of these companies might be should one of them fail. You can see that, right? But that doesn't mean that it's true that if one of them didn't make it, or if one of them were replaced by another company, let's say that Nvidia were replaced by Google in the ecosystem that we're working in at the moment in AI, it doesn't necessarily mean that all of the companies that rely on Nvidia or rely on another company would suddenly tumble. I don't think that we can definitively say that the health of a company is damaged by interconnected deals. I do think that there is a valuation problem in the world of AI. I do believe that the valuations are overhyped, and I do think that a lot of people would agree with me on that one. I do think, though, that the market has always determined how much a business is worth. And it doesn't matter what I think. It doesn't matter what anyone else thinks. It certainly doesn't matter what Michael Burry thinks, because he's shorting it. He's shorting all of them. So if he is right, that's fantastic, and he'll get a lot of money, as he did during the 2008 crash. And he predicted it, and it'd be great for him if that were to happen. Not so great for everybody else. I do think that it's very difficult for him to be able to, I suppose, support all of these claims, because we don't have that visibility of their accounts often, and the amount of deals and the speed at which these deals are being made means that we don't have the visibility of like how much this is actually worth. It does raise, though, an important question, and that is, should these companies be freer with the information they provide about the growth of their businesses? Should they be held to account a bit more and provide more information? I do believe that would be more helpful for the confidence of the market if they were able to provide more openly some of the details of these deals, and to get a bit more granular about how much they're spending, how they're going to reduce the debt, the masses of debt that they've accumulated, and what their plan to profitability actually is. Because for OpenAI, I'm not clear when they might reach profitability. I know they were talking about 2026, 2027. I'm not clear on that, and I would really love to know, and I think a lot of people would too.
I mean, one thing that really stuck out to me in this sort of some of Michael Burry's assessment was that Nvidia is obviously saying its new chips are cutting edge, they're needed for the next generations of AI, and sort of really bigging up the new chips, but at the same time saying that their shelf life for their chips is plenty long enough, and Michael Burry's wrong about his assessment that everything that they're buying right now is not going to be useful by the time it's actually used. What do you make? Do you think that sort of is mutually exclusive, that their shelf life is kind of fine? I mean, anyone that would have, I don't know, bought a GPU to play games on or whatever knows that something from 5 years ago is still relatively useful, but kind of coming out of usefulness now. Is that sort of the same sort of true of these AI chips that we're seeing? Is Nvidia extending its shelf life, or is Michael Burry underselling its shelf life?
It's interesting, right? It kind of reminds me of some of the claims that we had about the batteries from EVs. And I remember when it was like the sort of first generation of EVs, and people were really concerned because we're reaching actually the end of the life. We might have reached it already, actually, the end of the life of those first generation batteries. And there was a huge amount of concern going, what will this mean for like the circularity of these batteries? Like, how can you be claiming that you're doing well for the environment if you're creating a lot of waste of batteries that you cannot reuse, etc., etc. And it turned out that those batteries had longer life than they expected, and it was a wonderful surprise nevertheless. So I feel like some of this reminds me a little bit of that, and I think, you know, with these sorts of chips, it is really hard to predict how long they will last under the tension that they will be in a data center in which people are using it for Gen AI versus if you're using it for video games. It depends on how you use them. A shoe will obviously, if you've got a shoe on your foot and you're walking on it every day, it's going to erode, and that you're going to have to resole it a lot faster than a shoe that you wear occasionally. And I think with these data centers, it's kind of similar. I'm saying this in a very unscientific sort of way, but basically it depends on the amount that we're using these chips, and it depends on the amount of tension that they're under, I suppose, if we're putting it again very unscientifically. So I expect that the chips that are used pretty much constantly, that are, you know, under a lot of pressure to deliver, will have a shorter shelf life than those who are backups that have been in the packet and are not necessarily used straight away and are just waiting to be used. Like, the usefulness of a chip does not start at the time of manufacturing and then just sort of end. But he is right in a sense that the support needs to continue. And I know Nvidia had on its own website, and let me just pull it up. It had on its own website the amount of time that it was willing to support certain chips. And you know, you've got the maintenance support, the extended full support, and the full support. And we're looking at, I think it's like a couple of years on each one of those. Wait a second. So the warranty is 3 years, then you've got a couple of years on the extended 3 years on the extended full support, then another 3 years on the maintenance support, and that's like nine years total, right? So that's if you kind of take it as a purely on the face of it what Nvidia's saying, right? If we imagine that each chip is going to last 9 years, I mean, that would be the if that's the best case scenario and it's supported for 9 years, then we're looking at a significant amount of time in the AI industry. Obviously, it's not likely that all these chips would last that long. It's very unlikely. But it is also likely that people will want to upgrade in that cycle. And I don't think that, how do I put this? I don't think we have enough proof that these chips need to be replaced every couple of years. I don't think that we know enough yet about what's going on. It wouldn't surprise me if a lot of these data centers find themselves in a situation where they have to churn them. It wouldn't. But it also, conversely, wouldn't surprise me if they lasted a lot longer than people expected. I think we're just going to have to wait until that first tranche of predictions of like things will last between 2 to 3 years comes to play, and then we'll know if they still are using those chips, that they're lasting longer than we expected, and have that pleasant surprise.
Natasha Bernal, thank you for taking the time today.
Thank you.